In this video, I'll be talking about 3 stocks that I bought this past week and discuss a few other stocks that I'm looking to buy this following week. If you guys want to follow me on my journey where I take this account in my TFSA portfolio from $1,000 to $50,000, then consider subscribing down below. I'll also be showing you my entire $7,200 portfolio and talk about a few key news items in the Canadian economy that I found important this past week. Before we get started, it would really help me out if you could leave a like down below if you enjoy these weekly updates. Alright, let's hop over to the computer. So this is week 25 of my TFSA portfolio, and the first stock that I bought was on August 30th. I bought 1 share of TD at $82.90. The very next day on the 31st, I got a dividend from Enghouse. So the dividend was for $1.44. Then on September 2nd, I bought a share of Air Canada. I bought 1 share at a price of $24.10. On the same day, I bought shares of DCM. I bought 15 shares at $1 a piece. And to top things off at the end of the week, I had a limit buy that activated. I bought 1 share of TD Bank at $82.20. So for this entire week, I bought 2 shares of TD. If you guys haven't watched my previous video, I talked about why I was buying TD, so you can check that out if you're interested. But now going over to my entire portfolio, let's just refresh the page. And we can see how my portfolio is doing against the TSX index as well as just by itself. So far, the entire percentage change in my portfolio since starting this portfolio was 6.38%. I just realized I don't actually have a dollar amount of how much I'm up, so I should probably put that in right now. Now, after adding how much my portfolio has changed by in terms of dollar amounts, you can see that I'm up $436.68. Now, sorting my portfolio by current market value, you can see that TD Bank is now my #1 stock. If you've been following my journey, Power Corp Canada has always been #1 in my portfolio. However, with TD still down on my initial purchase, I've been buying more TD just because I think it's a relatively safe stock and they give you a solid dividend. The dividend currently sits at 3.83%. Power Corp Canada also does pay out a dividend of 4.16, and it's also been on the rise, and right now I have a 17.69 return. So I've been buying Power Corp Canada even though it's been going up in price, and I think that it's still relatively undervalued, and its fair value is around $45, which is the previous net asset value reported. One thing that I want to talk about right now is the fact that my portfolio, in terms of the number of positions as well as the companies, has not changed over the past month or 2 months or so. And yes, some of you guys are sitting there thinking, that's kind of boring. And yeah, I do totally agree. It is relatively boring to have the same stocks and you're just averaging into these positions. However, you got to remember when you're investing, it's not a short-term thing. At least that's not my mindset. I'm buying these companies for 3 years or so. So if I'm buying a company, holding it for 3 months and then selling it, then clearly either my thesis was completely wrong about it or I'm turning into a swing trader. And that's not what I want this channel to be about for this series. This is about long-term investing into companies that I've looked into, and I think that in the future, they're going to be valued higher than they are today or when I bought them. So typically the way that I do pick what stocks I'm going to buy next week is looking at the percentage return and how much I'm up or down. Typically I'm looking for the losers. So right now Air Canada seems pretty juicy because I'm down 6.41%, so I can dollar cost average down on this position more. TD Bank is still down by 1.44%, and I'll probably continue to average into that one a bit more. Data Communications Management Corp is a stock that I'm pretty much buying weekly right now as it sits around the $1 range, and I think the fair value for the stock is around $3 or so. If you want to see my full analysis, I'll link a video to DCM down below, which you can check out. However, this is a slightly higher risk stock just because of how small the market cap is, around $40 million. Then Good Nature Products is also another pretty highly speculative stock here, and I'm down 18% on that. However, looking at my portfolio, you can see that the stocks that are higher risk are a smaller position. I'm not going to make these my biggest position. I mean, maybe DCM I would consider. However, for Good Nature Products, I don't plan to make this the largest position ever unless it grows to be my largest position, because currently the company is not profitable yet. However, in 3 years, I think that they could be worth a lot more than $1.15 based on what their business is doing and how they're growing. Now jumping over to some Canadian news that was a highlight of this past week. Droughts in Western Canada are sending crop yields to new lows. So this year in the prairies, we got hit pretty hard where 37% of Alberta's crops were in good condition, compared to an average of 74%. And some of Canada's biggest canola producers in Saskatchewan have also struggled due to high temperatures. Why it matters? Countries that depend on Canada for wheat and canola imports could turn to other producers in Europe or Australia if droughts and extreme weather get even worse in Western Canada. So this is not very good for the Canadian economy and also for the government, I guess you could say, because the country is not earning as much money, so our GDP is going down as a result of these droughts. And what will this affect? Well, of course, wheat prices are going to go up because the supply is dropping. The supply is basically cut in half if you look at these numbers, 74% versus 37%. Now, when you're thinking about wheat prices, I think of bread right away. So I'm expecting the price of bread might go up in the short term or the near term, and there are a lot of other foods that depend on wheat. So we could see a creep up in our grocery bills, and this will also affect restaurants and everything down the line. Not only does this affect our carbs, it also affects our protein. Because cows, sheep, and other animals like that, they survive on wheat and things of that nature. And with crops like wheat at all-time lows for yields, this is not good for our meat sector either. So when foods all over the board go up in price, then people are going to look for alternatives that maybe haven't gone up as much. Or people will resort to cheaper foods. So think of like your craft dinners or McDonald's or fast foods. People will be going towards these because they're more affordable, and other things might have been priced out of the range with the increase in groceries. So the takeaway from this is to look for stocks that maybe are dealing with essential goods and maybe the lower price goods. Because as consumers see the price of their groceries rise, or maybe the quantity that they're getting for the dollar is going down and shrinking, they'll be looking for more affordable options. So perhaps your grocery store brands will do a lot better, like No Name, President's Choice, or other brands like that, versus the more premium names. If you guys are wondering what this email is, well, that's today's sponsor, The Peak. You can check out The Peak, and it only takes about 5 minutes to skim through the entire thing, and it's very engaging how they write it. I enjoy The Peak every single morning. It gives me a snapshot of what's happening in the economy and what's happening over the world, and it's completely free. You can read The Peak every single day and feel a lot smarter at the end of it. So if you want to check out The Peak today, check the link down below and you can sign up for free. They're essentially the morning brew of Canada. Now on to the second story, again brought to you by The Peak. So General Motors is teaming up with TELUS to put 5G services in their cars. So this was interesting to me because if you go over to my portfolio, I hold TELUS as one of my holdings, and it's the only telecom in my portfolio. So this piqued my interest. GM vehicles will come equipped with TELUS supplied 5G connectivity starting in 2025, improving in-car download speeds for music and videos, navigation systems, and other functions that require an internet connection. Now, what I found interesting here, or what I decided to do next, is to look up the 5G maps. So here on TELUS's site, you can see that 5G is still relatively sparse over Canada. So you're only going to get these super fast download speeds if you're in these highly dense populated areas. Now, if you go over to Rogers, you can also see that Rogers is relatively sparse. However, they have a massive concentration in Alberta area. But in the Southern Ontario area, TELUS takes the cake over Rogers. We also have to compare with Bell because there's 3 major telecom companies. Now zooming in closer to Southern Ontario, we can see that Bell has some sort of hash line for future developments, and there's quite a few around here. However, TELUS still takes the cake over Bell. And if you guys know Canadian population densities, Southern Ontario is a fairly heavily populated area. So TELUS having more coverage over Southern Ontario with 5G, we might see a lot more consumers shift to TELUS in the future. Looking at TELUS's stock chart over the past 5 years, I would say it really hasn't moved that much. It is bouncing around and not really going anywhere, except for recently where it shot up to new all-time highs. So over 5 years, the stock gained about 38%. However, it does yield a nice juicy dividend of 4.33%. So the fact that TELUS is broken out just now, and if we go to the maximum chart, I personally think that TELUS is due for a breakout with 5G coming in and just a lot more connectivity opening up. If you made it to the end of this video and it inspired you to start investing today, you can consider signing up for Wealthsimple Trade and get $50 for free for doing so. On top of that, you can get an additional $25 if you sign up for Wealthsimple Cash, and both these services are completely free. If you want to get my take on Wealthsimple Trade and why I use it, check this video out here. My other favorite brokerage is Questrade, and you can check this video right here where I review the brokerage and why I think it's a better option sometimes than Wealthsimple Trade.